Welcome to Give Me Credit. I'm J.S. Waldo, author of Mortgage Lending Explained, and this is our credit guru, John Mackey, author of Credit Genius and Incognito. You can find us both on Substack on our respective pages, jswaldo.substack.com and creditgenius.substack.com. Hi, John.
How are you?
I'm good. How are you?
I'm fine. I'm fine. Baseball's around, and we were talking about that off camera,
Yep.
and my love of the game and your love of the game, and it's interesting to talk about. But anyway, so I follow the Twins, you follow the Padres. It's a great experience. It's what summer is all about for me. There's an old quote out there by Rogers Hornsby. He said, "People ask me what I do in the winter." He said, "I look out my window and wait for spring." And that's kind of the way I live. But that's interesting. What I want to do today is go over a topic that I find highly intriguing and interesting, is putting a value on a home.
Mhm.
Now, a realtor puts it on the market for whatever price. They do a market analysis. That's what I used to do, and I come up with my own what they call comps or comparables. And I say, okay, what price should we put on it? And we come to an agreement, or if we don't, I walk away. But we come up to an agreement, and then finally the house sells. So you think that's it? No, it's that confounded appraisal. But it's a test of my skills too,
Mhm.
because it has to appraise out for the value that the appraiser gives it will be sufficient for this loan to go forward.
Mhm.
And that appraisal is what I want to talk about today. It's lengthy, it's exhausting, it's kind of scary, but in the end, you get a great report that's done by somebody that's very good at what they do. So let's talk about the appraisal. Is that okay?
Oh, it's great with me. I've written a couple articles about it recently. This is one of my favorite topics.
Yeah, cool. So an appraisal is actually, to define it, is a detailed multi-purpose analysis, not just a number.
Mhm.
What are people fundamentally missing about it? And why is it so confusing? And they confuse it with a tax assessment or a home inspection. Comparing it is such a costly mistake.
Yeah, and that's the classic comparison people think and they make, and the consumer specifically, they people miss the fact that an appraisal is not an opinion floating, in space. It's a defensible position. It's built like a legal argument with receipts. It's a structured, regulated report that must withstand underwriting, investor, and sometimes courtroom scrutiny. That is a fact. Every line
Yeah,
is there for a reason. A tax assessment, so let's just say what they are. Tax assessment is the government deciding how much money they want from you. That's really what it is. A
right.
home inspection, completely separate, is someone telling you what might break later or is broken right now, but it's been
Correct.
kind of hidden over here. An appraisal is saying what the market has already proven a property is worth in the context of lending risk. Those are three completely different languages. And the costly mistake happens when people treat them as interchangeable. They're not. One is an opinion, one is a condition, one is the evidence that the money depends on.
Wow. Good definition. If someone doesn't understand that difference, where are they most likely to get burned?
At the exact moment they think the deal is already done, exactly how you just said. That's when the appraisal shows up like a little quiet referee stepping into a celebration and saying, not so fast. If the number doesn't support the contract, everything that felt certain suddenly isn't. Pricing, terms, and even whether the deal exists at all gets rewritten. That's the part people don't like. The appraisal doesn't argue with the deal, it outranks it.
That's great. I love that.
Mhm.
Now, we've got something called the Uniform Residential Appraisal Report. What is it, and why does it matter more than buyers think?
The URAR, as we call it, is
Yeah,
basically, think of it as the spine of the entire system. Without it, everything collapses into opinion and chaos. Everybody's going to stand around and argue. It
right.
forces structure where people would rather rely on intuition. Property data, adjustments, comps, market conditions, reconciliation, it all has to be laid out in a way that another trained professional can challenge and reproduce. Most people, consumers, they never read it, John. It's not designed for them. It's not designed for the consumer side. It's designed for underwriters and investors who are basically asking one question. Can I trust this number with millions of dollars on the line? That's who it's written for.
Yeah, I've viewed them, and it reads like a scientific manual.
Yes.
Sometimes it's very hard to make sense of
Mhm.
it. Um,
It's
but
true.
but let's move on here. You were an underwriter for 35 years. I find that amazing. So who really holds the power, the appraiser or the underwriter?
As an underwriter, I'd like to say I do, but honestly, I think of it as a duet. The underwriter holds the final microphone. That's a fact. But the appraiser builds the case using market evidence. That's the real expertise, not guesswork. The underwriter then decides if the case survives policy, guidelines, and investor tolerance. Um, think of it like this. The appraiser writes the argument and provides the factual data, right? And then the underwriter comes in and decides if the argument and the data are admissible.
So you're a judge.
Pretty much.
Yeah, okay. If the appraisal is telling a full story about the property and the market, which parts actually drive the value? And how much do contract details like price reductions, concessions, and days on the market influence that number?
Yeah, that's a great question, John. Value is not pulled from one lever. A lot of people think it is. It's built from pressure points across the entire report. Okay. So the comps establish the boundaries of reality. The market analysis explains whether those boundaries are tightening or loosening. The contract section tells you how the current deal actually behaved in that reality, in that particular market. And that contract behavior matters more than people, even want to think or admit. Price reductions are the market saying, not at that price. We like the house, but not at that price. Concessions from the seller, they're paying for friction. Days on the market is the market's patience clock running out. None of that is decorative. Every single data point feeds into the final value.
Okay. So is the appraisal really analyzing the deal itself, not just the property?
Oh, completely. Yes, completely. A property doesn't exist in isolation in this process. It exists as a transaction with a history. The appraisal is reading that history like a forensic report, how it was priced, how buyers responded, how long it took to clear, what had to be negotiated to get it done. It's not a postcard of a home. It's a behavioral record of how the market treated that property.
Okay. Okay. If the sales comparison approach is where value is built, how do comps shape that number? Now, a comp for the audience is comparables.
Mhm.
And who decides what a bathroom or square footage is worth?
Mm. Okay, so let's think of it this way. Comps are like the scaffolding on which everything else hangs, okay, in this house. You start with real closed sales, not opinions, not hopes, but closings, the sales that actually closed. Then you adjust them until they resemble the subject property as closely as possible. So it's a grid, okay? And on this
Okay.
grid, you're going to have lots of things. You're going to have size, you're going to have condition, layout, location, amenities. Each adjustment is a question. What difference did this actually make in the market? So you start here with your subject and then you have these comps. There's no universal price tag for a bathroom or a square foot, just so you know.
Okay.
The market writes that every single day. The market writes that number. And the appraiser's job, this is why they're the expert, is to translate that behavior into adjustments that make sense. The adjustments that hold up and they don't fall apart under review because they're factual. Everything is based on factual data.
Okay, so how much of this is science and how much is, say, judgment?
Yeah, it's kind of both. It's structured like science, but in reality, it's lived like judgment. The grid itself is math. It's point blank math, and it's one of the things the underwriters check, believe it or not. We will actually physically do the math. We'll add, we'll subtract, we'll do the math and make sure everything happened in the current format because it's typed in, but it's hand added. And so the bottom line is the interpretation is experience. So that's again the experience of the appraiser, the expertise. Two appraisers can look at the same data and land in slightly different places, but they still have to land inside the same range of reality. So you can't freelance the truth just because you've seen a lot of houses.
Right, right, right. Um, you make it clear that active listings don't determine value, only closed sales do. And that really makes sense.
Mhm.
But why is that so hard for people to accept?
I think because listings are loud. Their sales are quiet. You look on your computer and you see all these listings in your neighborhood. The listings are everywhere. They're just everywhere. In our view, they're marketing, their hope, their strategy. Listings are what sellers hope to get. Closed sales are proof. They show what someone actually paid. One is intention and the other is the outcome. And the market only pays attention to the outcome.
Which really makes sense, absolutely. So you can go by and you can see a home listed at $500,000, but that
Mhm.
doesn't mean it's worth $500,000 is what they're hoping for.
Exactly. Listings are hope, sales are reality.
Okay. When the market changes fast, as we've seen
Mhm.
in recent years, can that gap create inaccurate values?
Yeah, that's a very difficult time for appraisers, and it happens more often than people realize. Listings can sprint ahead of reality in one direction, and sales lag behind, in the other. That gap is where confusion lives. And that's a difficult market for any appraiser. In fast markets, everyone's guessing where the finish line will be, right? And
Right.
appraisals can only work with where the finish line already is. That lag can create tension, especially, like I'm saying, fast moving markets. They're tough.
Yeah. How much how much does the broader market impact value? Can timing alone change it?
Timing is not a small detail. Timing, it's part of the price. Inventory, demand, absorption rates quietly rewrite what buyers are willing to accept, very quietly. Two identical homes can absolutely have different values just because they exist in different market conditions.
Yeah.
Same
Yeah.
house,
Oh yeah.
different moment, different outcome. Real estate is less about what is it worth and more about what is it worth right now in this current environment.
Okay. Is the appraisal a snapshot or a forecast?
It's a snapshot um, of informed by trends. It's a snapshot informed by trends. That's why it can feel like a forecast. It reflects momentum, not just a moment.
Okay. When the appraiser reconciles the data, what does that really involve? And is there pressure to reach a certain number?
Yeah, reconciliation. This is where everything comes together, the entire report. The appraiser provided the comps, the adjustments, the market indicators. Sometimes conflicting signals can be in the same report. Reconciliation is choosing the value that can actually survive scrutiny without collapsing under questioning. Again, we're talking data. It's not about averaging, it's about defending the number. And while direct pressure is not supposed to exist, expectations absolutely live in the system.
Okay. What happens when the data and the deal don't match?
Yeah, this is where it gets tough for consumers. The data wins every single time. The appraisal doesn't move to save the deal. It won't. It can't. The deal has to adjust or it doesn't happen.
Yeah. It's happened to me a couple of times in
Mhm.
my career as a realtor and loan officer. But
And I've seen it a lot as an underwriter.
I'm sure you have.
Mhm.
What is third party ordering, and does it really remove pressure?
Yeah, so I really like this question because we both were in the industry way back in the day, right? Where
Yeah.
you had direct contact with the appraiser. Um, Today, and really for the last 20 or so years, it means that the lender doesn't directly pick the appraiser anymore. The
Yeah.
request the request goes through a system or what we call an appraisal management company, an AMC, to create the separation. It's designed to create distance between lenders and appraisers so no one can directly steer the outcome. And it works to a point. I mean, it's better than the way it used to be. It reduces obvious influence. It doesn't eliminate, systematic influence. The rules, the review layers, and compliance environment still shape how the work is done.
Yeah, there was a lot of fraud that happened back in '07, '08 during the
Mhm.
banking crisis. And that's where I saw it a lot.
Mhm.
Home values were appraised at a certain level, maybe $50,000 over what
Yep.
it should have been, simply because the other side was getting a rebate or an incentive, and it was fraudulent right from the beginning.
Oh, and there were rings. There were rings of them, and they'd all work together. So you might have the realtor and the title company and an appraiser, and they all work together, and they would literally decide how they were going to price things and blow up a particular neighborhood. And in reality, that neighborhood couldn't support the value.
Absolutely. I had a couple of, I don't want to call them friends, acquaintances that actually spent time in prison for doing this.
Yes, yes.
But
Underwriters, some underwriters went to jail too. I mean, there were a lot of people involved back then that did some very wrong things.
absolutely. If lenders can't influence appraisers directly, where does influence still show up?
I think it shows up in the system itself, in the entire lending system. It shows up in guidelines, it shows up in review overlays, investor requirements, and how aggressively reports are second guessed. That all shapes behavior, the behavior of the appraiser.
So is independence real or just structured to appear real?
Yeah, I actually have received that question a few times. And my take is it's structured independence. No one's calling an appraiser to steer value. That doesn't happen anymore. But the work still has to pass through layers of rules, reviews, and investor requirements, investors and agencies. So the pressure doesn't disappear. It shows up in the system instead of a phone call.
Wow. Wow. When an appraiser or an appraisal comes in low, what really happens? Who takes the loss?
Well, honestly, John, the deal resets. That's how I always say that. The deal resets. The options are you have options here. Okay, you have this sales price, but now you have the appraisal. So you can renegotiate. As a borrower, you can renegotiate based on this data. You can decide that you absolutely love this home and you bring in more cash, right?
Right.
Or you say if the seller's not willing to renegotiate, you walk away. Who takes the loss? I think the person who takes the loss is whoever refuses to adjust to the data. The market doesn't split the difference out of kindness. We don't say, okay, well, the appraiser said this, but that's okay. We can push that over here. No. If no one moves, the deal ends.
Yeah, yeah, I've seen that a few times in my lifetime. It's kind of a scary thing
Mhm.
because, for example, in my day, an FHA appraisal stuck with that property for a length of time. I don't know what it is or was. I think it was like 6 months or a year, where if that property sold again, it had to sell for the appraised price. Am I
Mhm.
correct in that?
You are. So when FHA takes a property, they do go out and they do a different appraisal because they're trying to gauge where the market is in that moment. Because remember, an appraisal is a snapshot of that moment. So maybe it appraised 6 months before higher, but the market's tanked. So now it's appraising lower. And FHA has to sell it because, maybe they took that property back, as you said, but they're not necessarily going to get what they originally loaned on that because the market tanked. So they're going to rely on the new appraisal. And then, yes, they're going to stick to that
Okay. How often is this where emotion meets math and math wins?
all the time. Math always wins. This is where belief collides with evidence. Evidence, data, like as I keep saying, doesn't care how confident anyone felt going into the deal. Data always wins.
Okay. Okay. Can can a value be disputed, or is an appraisal essentially final once it's issued?
Values can be disputed. It can be disputed, but only in a very specific way, and it depends on the loan type. An appraisal isn't overturned because someone disagrees with it. The realtor or the consumer can't come and say, I disagree. It's worth this. And the appraiser goes, okay, no, that's not how it works. It's only reconsidered if there's a material issue in the data or the analysis. That usually means missed comp sales, comparable sales, incorrect property facts, and I've seen that a lot. What do you mean? This isn't a 4-bedroom house, or this isn't a 3-bedroom house. There's a 4th bedroom. You missed it in your analysis. Human error is a factor, right? Something that materially changes the support for the value. That's when it can be disputed. If the argument is preference or expectation, absolutely nothing changes. No, it's not, this is data. If the argument is evidence, the appraiser didn't consider or didn't have access to, then it gets reviewed. And I'm just going to give you a small little tidbit here. There are some states where recorded sales and the data is not public knowledge. So when you have a fast moving market, sometimes data gets missed. And that's when appraisers don't mind the disputes, by the way. If you have this additional data, if you know something as a realtor because you're out there in this market, they want to see it. And that's the part people misunderstand. You're not really disputing the number. You're challenging whether the support for that number was complete. If it was, the value stands. If it isn't, it gets corrected. There's no emotional adjustment in the system, only evidentiary correction.
Okay. Okay. Trying to process this because it can get mind-boggling sometimes. This,
Yeah,
and it's the minutia of the details.
yes,
Yeah. What what's changing with new appraisal standards? Uh,
yeah.
they're coming up, and does it move, or does more data help or complicate things?
Okay, so what's changing? Just to give you a little background, what John's talking about. Back in September, Fannie and Freddie came up with the 3.6 appraisal. The appraisal hasn't changed in years and years and years and years and years. And basically it was typewriter driven form, right? So what's going to happen is this is going to be a living, moving document, and it's more up to date. And it's going to be more data. With more data, there's more structure and there's more transparency. So all of this is on the way. It started in September on a trial basis. It's live now. It's still, everybody's working at their computer system. So it's like from January to November. November 16th, I believe, is the date where like you got to have your stuff together, because November 16th, it's in process, period. That's new one, 3.6 has to be used. So with this additional data, it improves defensibility. However, It increases complexity and scrutiny, and that is a reality. More information doesn't simplify, it tightens the lens on every decision.
Who benefits most?
I think the system being the lending system, it benefits first. The lenders get stronger validation. Consumers ultimately benefit when they understand what they're looking at rather than treating it like a black box. It's going to be spelled out in front of them.
Okay, so here's the final question. If you had to say one thing to a buyer or real estate professional about appraisals, what's the one truth they need to understand?
John, I think a lot of people well, let's just say a buying and selling of real estate for most consumers is a really big emotional transaction, right?
Yeah, yeah,
But the appraisal isn't judging your deal. It's revealing whether the deal ever matched the market in the first place. It
right.
doesn't decide what you hoped the property was worth. It reflects what the market has already proved it would pay. It has no stake in the outcome at all. It's not an opinion, it's evidence. And once you understand that, you stop treating an appraisal like a hurdle or a setback and start treating it like what it actually is. It's information that tells you where the market stands, whether you like it or not.
Wow. You know, you explained everything. The select, I go back to the what is it, Karnak, the Magnificent from Johnny Carson?
Yeah. Karnak.
Yeah. So you told me everything about this. And in fact, we know you haven't, but we're short on time. And,
Yeah,
we've got to, uh, there's so many more questions that could be asked. But we don't really want to get into the minutia of it. I think it's a general understanding is what
right.
you've given. And I
Hmm.
think that's beautiful. You did a great job with this.
Oh, thank you. Thank you, John. I think that's why I was moved to write about this as well. In the last couple of weeks, I wrote about just trying to explain what an appraisal even really is,
Yeah,
because most consumers don't see it. That's the thing. Although they're provided a copy of it, once you start reading it, your mind goes, and you don't want to read it anymore. It's
right.
crazy. It's a long document, and I like the new format, and I'm hoping the consumers will like it too. From an underwriter standpoint, I see a lot of benefits to it. You know,
Sure.
because it's a living, breathing document now, it's going to change. I can't tell you how the old document was see addendum, see addendum, see addendum. There wasn't enough space to discuss things. Now there's going to be space exactly in that section. And that section just grows and grows and grows as the appraiser starts giving you more data about that particular section. I
So it
think
flows better.
I think so. I think it is. I mean, with anything new, I think really there's going to be challenges with, everybody adjusting to the new document, but also computer systems, software.
Yeah,
That's a big one.
yeah, yeah. And with the advent of, I shouldn't say the advent, although that is a true word, of the artificial intelligence and the logarithms or the algorithms.
Hmm.
Um, what we're trying to do, or what they're trying to do, is if they're going to lend you money, they want to make sure that they're getting value for the money they're lending.
And if you're a consumer, that value should be extremely important to you, because why would you want to pay $10,000 more than it's really worth? You shouldn't. I mean, real estate's a wealth builder. Let's face it. Real estate's a wealth builder, and
Yep.
you don't want to go into a transaction without all the facts. You just don't.
Right.
Appraisers give a great value to the entire real estate industry.
Yeah.
So
Yeah.
thanks for talking about this. I love this. Is a great topic that again a lot of people don't ever have to delve into. But as an underwriter of 35 plus years, it was a part of my daily life.
Yeah. That must have driven you crazy, but you came out the other side okay.
I did. Well, I might be slightly crazy too, but that's what happens to underwriters after all those years. Well, this is everybody. This has been Give Me Credit. I hope you found this episode helpful. As John said, you can read my articles on these topics at jswallow.substack.com. I am a retired mortgage underwriter with over 35 years of experience in that industry. And our beautiful host here is John Mackey, author of Credit Genius and Incognito, where he discusses all things credit and financial news. You can follow him at creditgenius.substack.com. And again, this podcast is Give Me Credit. I'm going to ask you, please like, subscribe, wherever you're listening to this podcast. It helps us more than you realize. Feel free to comment, DM, ask questions, make suggestions, or tell us what you'd like to hear more about. We do have more guests scheduled, yay, in the coming weeks. And John, I'm still baffled by this. This is still our first season. We still have not taken a break. This episode is, oh my gosh, we just published episode 38. We have a few more already recorded. Every single week we've had a new episode.
We have. There's so much information to put out there and to explore. And in my heart of hearts, in my passion or with my passion, I want the truth to be known. I want it because people make much better decisions when they're intelligent about it.
Yep,
And
knowledge.
that's what we try to do.
Exactly.
Both you and I do. So
The more you know, that's the entire thought process.
you may be retired. I'm just tired.
Well, I'm retired from the mortgage industry. I'm definitely not retired. But
Yeah, I hear you.
thanks again, John, for today's discussion. And for everybody out there, we wish you have a great day, and we'll see you all again next week on Give Me Credit.
See ya.
Bye.